How's it going, everyone? Welcome back to the Invest in Wealth channel. Today's video we are going to be doing a portfolio update for you guys. Right now the current value is $145,014. We're going to take a look into my trades I did last week, the dividends I received, and how my positions went last week. So let's start off with taking a look in my first home savings account. In the last week, we are up 1% or $120. We own Bank of Nova Scotia, CNR, CP, and VFV. One stock that I own that's been doing very well this past week is actually CNR. I did snag up a few shares at the under 150 mark, which was great. It is up about 6.8%. It's jumped about $10 a share here, which is very nice to see from CNR. I own only about 30 shares, but looking to build up this position in the future as it is a great long-term hold. We are also up in Bank of Nova Scotia about 3.3%. CP we're up about 3.25%, and VFV we are up about 4%. So let's move along to my tax-free savings. In the last week, we are down 1% or $230. In this account, we own Allied Properties REIT, Enbridge, Pembina Pipeline, TXF, and some VFV. So my REIT hasn't been doing very well. It is a very high interest rate environment right now, so hopefully this is going to bounce back soon when the rates start to drop. So let's do a little market buy here. It is Saturday, so this won't go till Monday, but we'll do a market buy of Allied Properties here and just grab a share, because we did just get a dividend payment from Allied Properties, so we'll reinvest that. Going back at my other positions, Enbridge we're down about 4%. Pembina Pipeline we're up 8.12%. TXF we are up just under 16%. Then we own a small position here of VFV and we're about break even there. In my coming up in January for my tax-free savings room, I'll probably just be adding all the room into VFV, maybe add another holding here, but that's kind of my goal for now. Let's take a look at my RRSP. So in the last week, we are down 1% or $140. This is an account I kind of neglect. I don't really look too heavily at this. Most of my retirement savings are through my pension through work, so I don't really make trades too often in this account, but we do own Enbridge, HYLD, and TXF again. So Enbridge we're down about 2%, HYLD we are about break even, and then TXF we are up about 10%. And since I do have a little bit of money here, I'm going to go ahead and buy one share of HYLD. So we'll do a little market buy there. This is a Hamilton Enhanced US Covered Call ETF. Pays about a 13% dividend, so I just own this for the income. So lastly, let's take a look at the big account here, my non-registered. This is in the Canadian fund side. So last week we are up 2% or about $1,675. So this is an account we own many different positions here. So we have Allied Properties, Bell, Bank of Nova Scotia, CNR, which I just added to this position at the drop it had last week. Then we have Enbridge, Great-West Life, which has been doing awesome for us. We're up about 20% there. We have HMAX, HYLD, both of these for the monthly income. We have some Royal Bank, TD Bank, TXF, and then we have some VFV. So this account, it's been doing all right for us. This is the largest account we have. It is non-registered. My tax-free is maxed. My first home savings is maxed, as well as my RRSP. So any new money kind of just goes to my non-registered here. So let's take a look on the US side. In the US side, last week we are down 1% or $42. This account we own some shares of Apple, Google, Microsoft, and then what I've been buying up recently is Tesla. So this position is just completely speculation. They pay a crazy almost 50% dividend yield. I just bought this for fun mainly. Just adds a bit of risk to the portfolio, a bit of excitement here. But yeah, 50% dividend yield. So I thought it'd be fun to just buy, kind of see what happens. But that is it for the positions here. Let's take a look into my recent activity. Looking at my activity from where we last left off in the last video there, we did buy one more share of Apple. Apple is just launched the iPhone 15. I do expect the Q4 results to be extremely strong. It's back to school and also it'll be Christmas time. So I do expect Apple to hopefully go back near the $200 range. So I did pick up another share there. We did a market buy in the non-registered account of VFV. So got another share there. Then we did add to our TSLY position that I was showing you. So we did pick up 10 more shares. Couple staking rewards. We did do a $1,300 US dollar deposit to our US account. And with this money, we did buy again 10 more shares of Tesla, one more share of Apple at 176. And then we did pick up 47 more shares of Tesla there. Scrolling on down, had some money left over, so just bought 19 more shares of TSLY. And then today we did get an Ally Property dividend in our non-registered account of $17.25. Another dividend by ENS. This is a split share of Enbridge. I did sell off the rest of my position in ENS. It used to give me $65 every month in dividends, but I did kind of trim that off. I sold this whole position here and used that money to buy TSLY. And then in our tax-free account, we got another dividend from Ally Properties of $22.50. Our largest holding in my portfolio, TXF. This is the Tech Giants Covered Call ETF. They just announced their next dividend payable at the end of this month. I own 1,900 shares of this, and they just announced that they are going to be paying 0.384 cents per share. So that is $730 that I will be receiving on September 29th. So that'll be some big income in the portfolio. Great-West Life also pays on that day, so stay tuned for where I invest that money. I do have a couple options in mind that I'm going to share with you. So with those dividends, I think I might be going to start a position in Canadian Tire. I've been looking at this stock for a while now. It is down about 10.24% in the last 3 months. I really don't have much exposure in the consumer sector. So I do feel Canadian Tire could be a good spot for me to get that exposure there. They pay about a 4.4% yield, market cap just under 9 billion. I do like the PE ratio there. The stock looks to be good value. 52-week low about 140, 52-week high about 190. So I am looking at this. Hopefully when we do receive those dividends at the end of this month here, the stock will be closer to $150 mark. That's where I am looking to probably build a position in this, but Yeah, Canadian Tire. It just looks very attractive right now. I think it'll be a good pick to diversify my portfolio a little bit more. As I was saying, in the consumer sector, I don't really have much exposure to, so this is a stock that I am watching right now. My portfolio is also lacking in the utilities sector. I used to be quite heavy on this sector, but I kind of sold it all off. Canadian Utilities does look like a very good buy right now. They are the only dividend king here in Canada. They have raised their dividend every year for the last 50 years. Their yield is about 5.7%, $8.5 billion market cap. It is kind of near their 52-week low here. I've owned this in the past. It is a good trade, I think, at this price, but coming in the new year in January, I'll probably be adding this in my first home savings account, as this stock isn't extremely volatile, and I do think it is at a good value now. So I am going to be watching this closer into January. Then we'll get that another $8,000 worth of the first home savings account room, and I'll probably be picking up a few shares of Canadian Utilities. Enbridge has bounced back recently from their steep drop there about the news that they released. If you don't know what I'm talking about, I made a complete video on Enbridge and what they had just announced to their shareholders, kind of their the companies that they agreed to buy. So Enbridge did bounce back. They did touch under $45, which is an extreme value for Enbridge. $100 billion market cap, about a 7.5% yield. But investors were kind of leery on the future of Enbridge, but they did do a strong bounce back, which we do like to see, up 4% last week. This is my second largest position in my portfolio, so I am quite heavy in Enbridge. So it's nice to see that it was resilient in that big drop there, and they're up 4% the last week. Alrighty, I think that about does it for this episode. We didn't do anything too extreme in the past week here. It was just nice to see my positions and kind of where we are at. So hopefully you guys learned something new. Hope you enjoyed the video, and I'll see you next week with another episode. Thank you. Bye.